Hello traders, this is the last midweek market focus of the year, the 19th of December 2012. What I'm going to be doing is the usual stuff. I'm going to go through the FX market and then I'm going to move on to stocks. I'm going to spend less time on FX. Reason being is because I normally spend much more time on the forex market than on stocks. All right. Okay. As we all know, everything is overstretched. So if we go to the daily chart, we can all see that we had some rallies, right? The euro dollar is trading at almost the 132 level. It's 131.68. Now the market is closed because I'm doing this midweek on a Saturday. That's the rally that we had. It's currently trading at the top of the range. If it breaks through, it's going to go up to the 132.70. But the sooner the later, it's going to be pulling back down to the 50 moving average. Alright, so every time it's overstretched, it's going to be pulling back down. So that's euro dollar. This is cable. It's not that overstretched than as the one on euro dollar, but it's currently trading at 161.77. It can carry on going up still. It can go up to this level here, which will be almost 300 pips away from the 50 moving average. Now it's 160 pips away. Here went down 190, then it pulled back. Here went up 160, came back. Here went up the same thing, 117 came back, and that's where we are now. All right, and we are sitting on a horizontal level. If it pulls back down, it's going to pull back down to the 50. It's not making higher highs and higher lows, and kind of this not clear trend at the moment, so we'll leave it alone. Japanese yen is been rallying, had a massive rally, and there's a high test bar now right at the top. It came back up to the same level as before. It was trading at that level back in March. Is the 84 level, right? And it's massively overstretched as well. High testing, so this is due for a pullback, right? Also, this Sunday is the elections, so by the time you watch the midweek market focus, have a look at the elections, the results, see what happened. And it's a bit dangerous to trade the Japanese yen now, as it's been rallying for quite a while now. So what I have to say in this moment in time is that everything is going to be pulling back. So you're not going to get snipers long or pivot longs, mainly because the 60-minute, well, you might get some snipers, well, we're definitely not going to get any sniper. Might get some pivots, right? Might get some pivots short, as you have the agreement of the 60-minute, but that will take a while. You will definitely not going to have any sniper when it's overstretched, because it has to be all above in all time frames. So this oncoming week is going to be difficult to trade snipers. Might be able to go for a few pivots, and also it's going to be difficult for income generators unless it carries on with a trend, but it has to be pulling back down. All right, and Kiwi all overstretched. If you go on to Aussie, same thing, overstretched. It's going to be pulling back down. Canadian, overstretched as well to the downside. Euro pound, overstretched right at the top. It's going to be pulling back down sooner or later. Right, that's where it is now. And we have a level here as well. That is an ascending triangle. So look for pullbacks. If you break through, it's gonna go up to the previous level, which is there. There is a spike here. Let's go back in time a bit further. Yeah, somewhere here. Although I believe it's gonna be pulling back down to the 50 moving average. That'd be a breakout. If it stays within the triangle for a bit longer, might get a nice breakout of this horizontal level. Right, I'm gonna move on to stocks. I'm gonna have a quick look at the banking sector first. Barclays. It's been going up still. Also, the FTSE is right at the top. There is, well, this Barclays, which is right at the top as well. And the FTSE, which is here, is right at the top as well. Right, there it is. So we had some rallies, the Christmas rallies. Dollar index been going down, and equities been going up. As I said on the last week, midweeks. And I said that the dollar index was pushing down, and if it does push down, all equities are going to be going up. So that's why the FTSE 100 is right at the top, and it's going to be pulling back down, which means equities are going to be turning a little bit as well. This HSBC right at the top. Got some good trades down here. Now it's up here. It's going to be pulling back down. Lloyd's Banking Group still there. Still hasn't broken this triangle. Alright, there it is. And it's squeezing in within this little triangle here. The longer it stays, the better it is. It's building up a momentum, and then if you break through, then it's just gonna go straight up to the 60 level quite easily. Is that over here, the 50 level? 60's up there. It's just heading back up again. Right. I'm gonna have a look at the mining companies now. They're very, very volatile. Right, the banking sector and the mining sector are the two sectors that are pretty much driving the FTSE. They are big companies. The market capitalization is big, especially on all the mining companies. That's why it's dangerous to trade. They're all recovering now a little bit, especially Xstrata. Here it is. This is Xstrata. It's making I'm gonna get it from the top, actually, from here. It's making an ascending triangle. There it is. And it's just breaking through. Well, that was last Friday. It's breaking through to the upside. Great. And I believe it's going to start cycling upwards, making high highs and high lows. EMAs are all pointing up. Glencore took over this company not too long ago. If you break through this high, then we're just going to be cycling upwards all the way. These are the previous levels to watch out for, and it's going to be moving into sections. It's going to be into this section, it's going to break through, and so on, right? So have a look at strata for those of you who are trading stocks. Right, let's move on. Nothing there. This is flying. Nothing there. See, they're all recovering now. They're all starting to push up slightly. I believe all these companies, they're all going to start cycling upwards. Cannot go any lower. There's a beautiful double bottom right here, and he's kind of struggling to break through this low. That was on the first week of November, and if he cannot break through the downside, then has to go to the upside. Struggling to break through. As it takes this high out, it's going to pull back down, and then hopefully it's going to start making high highs and high lows. I'm going to keep an eye on the pattern. The 20 MA is going to start angling upwards. It's going to cross over the 50 MA. That's called a golden cross, and then it's going to start cycling upwards. And look at that. And that was in 2009. So if it recovers, it can go up to there once again, to the ceiling of the house. This is the floor, and that's the ceiling. All right. Let's go into the monthly chart. I'm going to type comma enter. This is the monthly chart. Jesus, had a massive trap. That was wow. That was yeah, that was a few months ago. That was in 1 month. Had a massive drop down to this low, where it's kind of struggling to break through these lows. It tested the level there several times, and it can easily head back up again. Up here. So within a year or so, can easily be trading up here. Right. So keep an eye on it. Look for 20 bounces on power plays long on all these companies. Leave this alone. It's too volatile. Same example. Massive drop, cannot break through. If it takes these highs out, it's going to start cycling upwards. You might get some nice 20 bounces all the way, and some nice breakouts to the upside, and power plays to the upside. Right. Next one. This is all on the monthly chart. I'm gonna go back to the daily chart now. There we go. Starting to recover. I like to see that these highs are taken out, pulls back to the moving averages, and then look for 20 bounces on power plays. This is right at the bottom. It's a bit choppy. Nothing there. Right. Looming, starting to recover now after the incident. This is a massive company. Look for turning points down here. Right. Look for turning points down here. As it takes these highs out, then it pulls back, and then you might get some nice opportunities of the 20 and the 50, some low test bars, after some high highs and high lows. That'll be an indication of a turning point in the market. Now this low already failed to take the previous low out. This are head and shoulders, right? This one down here. That's one shoulder, that's the head. And this the other shoulder. And as it takes out, will this be the neckline? Although there is a massive spike up here, right? But there's a beautiful inverse head and shoulders. It's an indication of a turning point in the market. All this was all news driven, right? That's the incident. And yeah, now it's heading back up again. Had a massive rally. Like a week and a half or so pushing up. See, 1, 2, 3, 4, 5, 6, 7, 8. All by a bus. Expecting the sooner or later some seller bars, and then hopefully a low test bar of the 20 or the 50, and then some opportunities back up again. Something there to look at. Alright, I'm going to go into the GU20 bounce. There we go. And now this one here, like that. Right. I'm going to go into formulas. There we go. These are the 20 bounces. It's kind of pushing down, but it's not that clear because it's not really bouncing off the 20 EMA. I like to see some clear bounces like here, right? Or like there. That's very nice. 20 bounce, 20 bounce, 20 bounce. That was a losing trade. So these are all winning trades. Winning depends on what the stop loss is. But you're looking, this is a beautiful one, especially when support becomes resistance. This is a key level, right? So it's testing the resistance, pulls back down, then it breaks through, puts a high. That's a higher high, pulls back down, and it gives some entries, and then back up again, straight up. Right? These are one ABC pattern as well. Powerful. A very powerful pattern. A, B, C pattern. That's not bad. This is very nice. Lower highs and lower lows pushing down. Great. Massive consolidation here. Yeah, consolidation is going nowhere. That's why the 20 EMA is going flat. And that's what we are now. So, which is not very clear. So that's why we're going to leave it alone. That was very good. And here as well. Although there's some gaps in between, bars a bit too big. There's a clear turning point here. These highs are failing to take the previous highs out, and then it pulls back down. Had a massive sell-off, and it's nothing there. Nothing there at all. It's just an ascending symmetrical triangle. Sorry. There we go. A bit of a triangle formation there with a bit of noise down here. Low test bar. Bit of a key reversal there. High test bar here. Alpha level. EMA doesn't know what to do. It's so wavy. Right, let's go on to another one. Another symmetrical triangle here. If you look into trade triangles, the longer it stays within the triangle, the better it is. Entry here, stop loss there, and entry here, stop loss there. Can take it short or long. You can even place an OCO. One order will cancel the other order. Speak to your coach about it. It's an option on ETX. You can go into OCO, entry here, stop loss there, and entry here and stop loss there. So you're looking to buy and sell at the same time. Whichever triggers first is going to cancel the other order, right? And normally you go for a 3-to-1 on this kind of setups. Nothing there. Let's see what's happening here. Wow, that was a massive gap. That was a clear bounce. That one there. I would have taken that one there, even though it went through the roof, but it's not making a high. That would have been my main concern. I would have liked to see this higher than these highs, and then happy days. No, it was a good trade. That was brilliant. Pushes down, might sell off, pulls back to the 20, and goes again. Yeah. An ABC pattern there as well. And there. Nice bounce. Right, so look for the clear ones out there. That's a clear one. Goes up, pulls back down to the 20. Beautiful low test bar. And then it goes back up again. There is a double top formation. Pulls back down. This high fails to take the previous high out, and it goes down. Alright? So it's all based on the same principle. It's all based on cyclicity. The high has high lows, high test bars, low test bars, the way it's bouncing off the 20 MA, the size of the bars, and so on. Just practice. Look for clear patterns, clear setups, and don't forget to risk manage. And also, now there won't be much happening now, and as everything is overstretched, so it's a good time to go through your trades, especially the losing trades, and see if you would have actually taken the trade by looking at the trade again. You'll see that sometimes when you're going through your trades, you'll be like, oh, I have no idea what I saw on that trade there, and it wasn't a good trade, and therefore it turned out to be a losing trade. So you just do some back testing, go through your losing trades, and practice. And also stay away from choppy markets, and if it's capping, stay away from it as well. Just look for clear ones. Alright, the clearer the better. Go through a checklist as well. Write down all the main points, and then just tick the boxes and focus on the clear ones. Right, look at this massive high test bar, bouncing off this level and pulling back down to the moving averages. Look how powerful it is. That it even goes through the 20 down to here, to the previous low, to this low test bar, and then it cannot break through, and then it goes up and it breaks through the highs, right? And it pulls back down to the 20. Bit of noise there, goes up, and then it takes all the highs out, and it goes up to this previous level here, test the level, and then it pulls back down. That was news driven here massively. Big bars here. Don't like these big bars. That was obviously news driven as well. It's massive sell-offs. Alright. So look for clear moves, clear trends, and analyze the FTSE 100 as well. Go through the stocks, then match it up with the sector. Move on to the indices. Look for agreement and look for time frame agreement as well, from the daily chart to the weekly chart, but only as you get more experience. For now, just focus on the daily chart and look for clear patterns. Alright, okay, that was the last midweek market focus of the year. Have a good Christmas, enjoy the break, and I'll catch you all next year. Take care. Bye now.